Good morning. Texas manufacturing momentum is reshaping Houston area commercial real estate. And Texas has emerged as one of the clearest winners of the U.S. manufacturing reshoring movement. And Houston sits at the epicenter of that growth. And according to recent data from Newmark, Texas now leads the nation in advanced manufacturing project announcements and remains one of the few states still adding manufacturing jobs, even as national manufacturing employment contracts on a broader scale. Now, this trend is not cyclical or speculative, it's structural. Texas benefits from the lower power costs, reliable energy infrastructure, deep labor pools, port access, and a pro business regulatory environment. And these advantages are attracting long term manufacturing investment that directly translates into sustained commercial real estate demand. Now, the manufacturing multiplier effect is something that we're seeing in commercial real estate. And manufacturing facilities rarely operate in isolation, and major investments create a multiplier effect that drives demand well beyond the initial plant campus. And as Newmark's data confirms, markets like Houston are seeing net absorption driven by real users and not by speculative leasing. So let's look at how manufacturing growth generates demand. And you can see that in supplier and component facilities, nearby flex and light industrial buildings, but also logistics and distribution hubs, service-oriented industrial users, but supporting office, medical, and workforce housing will also be a component. So for lenders and investors, this creates layered demand across multiple property types, reinforcing long-term occupancy and cash flow stability. So why Katy and West Houston are perfectly positioned for growth? Well, the Houston, Katy, West Houston I-10 corridor is uniquely positioned to capture manufacturing spillover because it's got proximity to Houston's energy ecosystem and logistics access through the Port of Houston. But also a growing skilled workforce makes Katy especially attractive for manufacturing adjacent tenants that require speed, power, and scalability. Now, newer industrial inventory along I-10 and the Grand Parkway allows companies to move quickly without the development risk or long-term timelines seen in more constrained coastal markets. And this combination continues to attract upstream and downstream supply chain users seeking operational efficiency and political certainty. So, what does this mean for financing and capital strategy? And from a mortgage and capital advisory perspective, manufacturing driven CRE demand strengthens the underwriting story for industrial and flex acquisitions, ground up industrial development, owner occupied manufacturing facilities, supplier and logistics real estate, but also land banking along growth corridors. Stable absorption, diversified tenant demand, and job creating industries improve lender confidence, especially for bank, SBA, bridge, and private capital executions. And well-located assets in Katy and West Houston remain attractive even amid broader economic uncertainty. And so the bottom line is that manufacturing reshoring isn't just a national headline, it's a local demand engine for Houston area commercial real estate. And Katy sits directly in the path of this growth, benefiting from infrastructure, energy access, and scalable industrial supply. So for borrowers, investors, and developers, this environment creates durable financing and acquisition opportunities that reward long-term strategy over speculation. And that, my friends, is it for the day. Please visit my website, billrapponline.com, to figure out how to get a hold of me. Love to talk to you more about your situation. Take care.